Very good morning to you and welcome to the ASX at Breakfast. I'm Rachel Jones reporting live from Kalkine Studios in Sydney. Now, Australian shares are set to slip at the open this morning following a poor start to the week on Wall Street. The domestic market is also expected to be weighed by a likely fall in local miners and looming concerns over the global interest rate hikes. Now, the ASX 200 is likely to open 50 points or 0.7% lower, according to the latest ASX Futures. Yesterday, the benchmark index finished 0.95% lower at 7,046 points. Moving on to some business news from this morning now. An online retailer, Kogan.com, has posted a $35.5 million loss in financial year 2022. That's down from a profit of $3.5 million in financial year 2021. Revenue fell 8% to $718 million. Kogan said the year was significantly impacted by ongoing COVID-19 related interruptions and associated fluctuations in demand experienced across the entire retail industry. And that resulted in increased logistics and other operating costs. Now, the company has focused on promotional activity to address the excess inventory levels and also the associated holding costs. Moving on, and it's better news for Boral, who today reported a statutory net profit after tax of $961 million for the year ending 30th of June 2022, which included a post-tax significant gain of $811 million. Continuing operations earnings before interest and tax, excluding property, was $107 million, and that was in line with the revised earnings guidance that was announced on the 18th of May this year. Now, in financial year 2023, Boral expects revenue to be higher than financial year 2022, driven by strong price growth and increased volumes, with volumes to benefit from less disruption, including no construction shutdowns and higher construction demand. Well, now it's time for a very short break, but stay tuned for more news set to affect your trading day.
Build better relationships, get connected, heard and noticed. We always believe in getting you the best. Kalkine Media's growing platform, Kalkine TV, helps you connect to an inquisitive audience from across the globe. Interact in a trusted environment. Showcase your brand on Kalkine TV in a seamless and effective manner. We connect and curate content as per your business needs. So why wait? Write to us at guestteam@kalkine.com.au.
And welcome back to the ASX at Breakfast report, taking a quick look at the global markets now. Now, US stock closed lower yesterday on concerns that the Federal Reserve's efforts to control inflation would lead to weakening of the global economy. Over on Wall Street, the Dow Jones dipped 1.9%, the S&P 500 fell 2.1%, and the Nasdaq ended 2.55% lower. In Europe, the local stock indices ended lower after Russia's Gazprom announced halting of the natural gas supplies for 3 days at the end of August. So as a result of this, the Stoxx 50 fell 1.9%, the FTSE dropped 0.2%, the DAX dipped 2.3%, and the CAC ended 1.8% lower. China's central bank slashed some key lending rates by between 5 and 15 basis points yesterday, a boost to their slowing economy. MSCI's broadest index of Asia-Pacific shares outside of Japan declined 0.97%. Now, the inversion of the US Treasury's yield curve widened as the market awaits the Fed Chairman Jerome Powell's speech at Jackson Hole this Friday. The yield on the US 10-year note surged 6 basis points to 3.03%. Oil prices traded on a volatile note after Saudi Arabia's energy minister said the OPEC and its allies would trim production to counter market challenges. WTI futures fell 54 cents to end at $90.23 a barrel. Brent crude finished down 24 cents at $96.48 a barrel. Gold prices fell yesterday, and that was account of a strong rally in the US dollar. US gold futures were down 0.8% to finish at $1,748 an ounce, and Bitcoin fell 1.94% to $21,096, weighed down by broad risk aversion in the markets. Well, that's all for our ASX The Breakfast Report this morning here at Kalkine TV. Have a great day trading. Stay tuned for more market updates and economic news live throughout the day. I'm Rachel, signing off for now.